So, as we're all aware, the market has been pretty shaky the past couple weeks, and last week we took a pretty sharp decline. When we look at the market, you can see that anytime we have a decline, we fall below these important moving averages here, and we come down to test the 100-day, which is this red line here. We have a bounce that leads to new highs, and you can see the market has done it 3 times here in the past. Looking at last week, you could see that this was not the case. When we fell to the 100-day moving average, we continued to break through and fall to the 200 and actually fell a little bit below. Typically around this 200-day moving average is where investors will get that buy the dip mentality and give us that bounce that we expect. However, you can see in this case that investors did not use that to buy the dip. Instead, these moving average lines were used as stop loss points. So when the market fell below these crucial points here, stop losses went off and triggered this high volume selling. This is what leads to panic selling, causing this huge volume spike here that you see. So what we have to look for next is, what is our next key support line? To do that, you need to look at a more macro time frame. So here you can see we're looking at daily candles. You would want to use something like the weekly. When we look at this larger time frame, you can see that the moving average lines are much more smooth and have broadened out. So going forward here, you can see that our next key support line is going to be the 50-day moving average here, which is right around $430. We should see a bounce around this 430 mark here, which is the 50-day moving average. However, given with all the market uncertainty that we have, if we do continue to break below it, the next moving average line is going to be the 100-day, which is right around 400, which is the breakout point that we had on SPY that we never came back down to retest. When a stock or markets in general break out, you typically want to see them break out and come back down and retest this resistance line, which is now a newly formed support line. So, looking at markets, a lot of people are panicking. They don't really know what's going on. Are we screwed? Is the end near? What is going on in the market? We know that typically every 2 years, markets have a 10% correction or so, and we're right around that 18-month mark. The last time the markets had a correction was back in March of 2020 during the COVID-19 pandemic. As you can see, since markets fell back then, they have rallied non-stop for the past 2 years and just shown some non-stop growth. So what's going on right now is completely normal. Markets are going to have to correct themselves. They have to cool off and come down before they make new runs. So like I tell people all the time, if you're ever worried and need some reassurance, just look at the left side of the chart. And what I mean by that is look at how low we were and how far we have come since then.